All right, let's jump right in. The global market today is, well, it's getting pulled in three totally different directions at once. You've got a political bombshell dropping in Washington, a massive policy push happening over in China, and then pretty much everyone is holding their breath watching a single tech giant in Silicon Valley. So, let's connect these dots and see what's really going on.
The day kicked off with a real shocker. President Donald Trump said this to a sitting Federal Reserve governor. An action like that immediately sent some serious tremors through the entire financial world. But, the real weight of this statement, it goes way beyond just the words themselves.
111 years. Think about that. In the entire history of the U.S. Federal Reserve, this has never, ever happened, a president removing a governor. So we're not just talking about something that's a little unusual. This is completely unprecedented. And it just shatters this long-held tradition of the central bank being independent from politics.
So first up, let's dig into this. A major shock to the system, all because of this move at the Fed. The governor we're talking about is Lisa Cook. Now, the official reason given for her removal was an accusation of mortgage fraud. But honestly, for the markets, the reason almost doesn't matter. It's the action itself, the firing, that has everyone so unnerved. So what happened right away? Well, the US dollar took a hit and Treasury yields fell. Now, why is that? It's all about confidence. See, global investors rely on the Fed being this steady, apolitical institution. The second you get even a hint of political pressure creeping in, that confidence starts to crumble, and that affects the value of all U.S. assets.
Okay, so that uncertainty didn't just stay in the U.S. Nope, it went global, fast. And that created these ripple effects all over the world, with some market reactions that, well, they might surprise you. Just take a look at Asia. It's a really fascinating split. On one side, you have the Chinese markets in Shanghai and Hong Kong. They surged. But then you look over at Japan's Nikkei index, and it took a pretty significant hit. This tells you it's not some simple, everybody's scared kind of day. Nope. Different economies are reading this news in completely different ways.
But maybe the most counterintuitive reaction, the one that really makes you think, came out of India. You'd assume all this turmoil in the US would be bad news, right? Well, one specific sector over there actually found a major silver lining. And this is where the nuance really kicks in. Look at this. India's IT sector jumped over 2%. At the same time, the banking sector was, basically flat. So what gives? Well, the market is making a bet. They're thinking, okay, all this political chaos in the US probably makes a Federal Reserve interest rate cut more likely. And if you're an Indian tech exporter who earns in dollars, that is fantastic news.
All right, so while all that drama was unfolding in the US, a powerful and completely different story, a real countercurrent was building in China.
Beijing is unleashing this massive, coordinated strategy to boost its property market. It's kind of like a three-pronged attack. It started with national tax cuts. Then they eased up on purchase restrictions in the capital, Beijing, and just recently they announced major reforms in Shanghai, letting more people buy more homes. And make no mistake, this is about way more than just saving developers. It's about restoring confidence in the entire economy.
And the impact? Oh, it's been enormous. Fueled by this stimulus, the total value of China's domestic stock market just blew past $14 trillion for the very first time. That shows a huge surge in investor confidence, all driven by this decisive government action. So, we've gone from a political shock to a policy stimulus. Our third major force today isn't a country or a central bank, it's a single company, NVIDIA.
The chipmaker NVIDIA is set to report its earnings this Wednesday. And this is a huge deal. I mean, we're talking about the world's largest company, the undisputed leader of the whole AI revolution. Its results have the power to either pour rocket fuel on the global tech rally or bring it to a screeching halt. The entire market is just holding its breath.
And to understand just why everyone's so focused on this, look at this chart. NVIDIA alone now makes up a staggering 7.6% of the entire S&P 500 index. That's one company out of 500. This is the very definition of concentration risk. It means the performance of one single stock can have a massive impact on the retirement accounts and investments of millions of people.
So, what's the big picture here? If we step back from all the noise, you can really see three dominant stories, three narratives, driving the market right now.
It really boils down to this. First, a deep uncertainty around central banks, sparked by all that drama at the Fed. Second, China is playing this two-track game, trying to fix its old property-based economy with stimulus, while at the same time pushing for independence in new technologies.
And third, there's this ever-present risk that the market has become way too reliant on the fortunes of just one company.
And that leaves us with the big question, doesn't it? You've got the raw power of politics, the deliberate hand of state policy, and the concentrated might of a single corporate giant, all pulling the market at the same time. The tension between these forces is what's going to define where the global economy goes from here. So the question for all of us is, which force is going to win?